Good afternoon and welcome to BizTech Asian Midday Market Watch. It's the 5th of September. I'm Samantha Voon and my co-host here with me, Brian Fernandez. So let's start by taking a look at the summary of market actions. So overall, Asian markets tried to recover today after a sharp sell-off, while a rally in treasuries weakened the dollar and pushed up the yen as concerns about the US economy increased the chances of significant rate cuts from the Fed. Now, Japan's Nikkei dropped 1.34% to a 3-week low, but South Korea's tech stocks rebounded, rising 1% after yesterday's losses, but have seen drop again to 0.5%, down by 0.5% today. Now, this week has been packed with economic data, Tuesday's weak manufacturing data, and Wednesday's mixed labor figures have left markets jittery. Investors will now be carefully analyzing US service industry data and jobless claims to gauge the health of the US economy and the labor market. However, the main highlight for the week remains Friday's highly anticipated non-farm payrolls report for August. In the currency market, the dollar stayed under pressure as investors sought safe haven assets. Now, the yen was one of the biggest gainers, trading at 143.67 per dollar, nearly 3% for the week. And similarly, we had the Swiss franc, another safe haven currency, held steady at 0.8467 per dollar. Now over to you, Brian.
Now, thanks again. Thanks for that, Sam. Over in Australia, Australia's central bank governor, Michelle Bullock, reaffirmed that it's too soon to consider rate cuts due to persistent inflation. Despite recent data showing sluggish economic growth and easing headline inflation, Bullock emphasized that reducing inflation to the target range of 2 to 3% remains the Reserve Bank of Australia's top priority. Domestic pressures like housing costs continue to drive inflation, and core inflation is not expected to fall within target until late 2025. Bullock warned that entrenched high inflation would further slow down the economy. Now, the RBA has kept rates at 4.35% since November, and while markets anticipate a potential rate cut by December, Bullock remained focused on managing inflation without sacrificing employment gains. And that's all for today's market updates. Now, to give us further insights on today's markets, we have Tina Teng, independent market analyst out of New Zealand. Tina, welcome to the show.
Hi, Brian. Thanks for having me again.
Good to have you here, Tina. So, let's get straight into it. We've seen NVIDIA's plunge over the last few days. Could you walk us through what happened and, more importantly, the impact on the markets and also around the whole semiconductor industry?
So first of all, that's from the macro background. Right now, it's the risk aversion sentiment have driven the market movements. Because AI stocks or semiconductor sector have surged the most in the last year and beginning of this year. I think right now is the time for investors to take some profits during this conjunction of rate cuts by the Fed. And also from NVIDIA's last earnings report, it shows that actually its growth has slowed down, even though it's still very steep growth, like more than 100% in the revenue growth year on year. However, the pace have softened significantly from last quarter, and also the company provided the guidance for the current quarter actually is weaker than expected. So I think right now the semiconductor sector suffers the most from this risk of sentiment.
Okay, Tina, speaking of risk of sentiment, the relationship between the 10-year and 2-year Treasury yield briefly normalized yesterday. So that reversed a classic recession indicator. Talk to us about this normalization of real yield inversion and what should we really read from this?
So the reason why briefly the two benchmark spread, the yield spread have reversed, is that markets are pricing for a deeper rate cut by the Fed. So the shorter tenor yield bond yields dropped more than the longer tenor. So I think at the moment, because sentiment is very fragile due to the weak economic data from the US, and in history, usually when this happens, this economic recession happens. So I think just upon a combination of the factors, the people, investors are cautious, nervous about what's going on in the markets.
Now, finally, Tina, oil. Suddenly, investors have turned bearish on oil. You've got Citi saying that 2025 oil prices may average as little as $60 a barrel without deeper OPEC plus cuts. What's the reason behind the bearishness around oil all of a sudden?
I think recession fears are the main reason for the oil price drop. However, I think in the long term, because at the moment it's like a broader transition from fossil fuel to green energy. So that means a demand for the crude oil would weak eventually. But in the short term, physically, I think crude oil markets demand is still high compared to supply. So I think this is all about the outlook of the oil demand. But there are still growing expectations for the OPEC to further cut its outputs. So they will try their best to sustain the oil price stability. So there is a chance for short-term rebound in the oil markets, in my expectation.
Okay, so your expectation is short-term rebounds on oil prices. Thanks, Tina.
Thank you.
Okay. Thank you so much, Tina, for your insights.
Thank you, Sam. Thank you, Brian.
So we've been speaking to Tina Teng, an independent market analyst based in Auckland, New Zealand. Now, this has been BizTech Asian Midday Market Watch. Be sure to keep informed on the latest market updates, weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.